Hi, this is Kim Watson of Ezeetrader. Welcome to what has become the second in my series on reading price action. Now this is looking really around supply and demand and price action around trend lines. So here we go, and key levels. So the first thing to understand about the markets, and a lot of people don't really work it out, is the market price action is all about supply and demand. So supply, oversupply will push the market down. More demand will push the market up. So it's as simple as that. Strong demand, market goes up because the supply isn't there, and too much supply, and if the demand isn't there, the market pushes down. So very simple, but people forget about this. So that's the first part up there, and it's very key around where you get these multiple highs, because basically you've got price pushing up to this level here, right over here, and obviously there's supply at that area. It's putting a lid on it effectively. So it's put a lid on around that area, and supplies come in and pushed it back down up until a point where there's demand. So and the demand is bigger than the supply. So, and again, that pushes it back into where previously there was supply. So it's an area around here, may cause some effectively resistance traders, and it's an understanding that traders often sell back into previous highs. Why? Well, look at this red bar here. You're thinking, well, it didn't because it pushed up higher, but hang on, this is a daily chart, and what it showed me here is that the price did actually trigger into the bodies. Now, not even to the tails, not even to the highest price there, but the body reacted to that on that day. So that there was a whole day of it pushing down there. Now, what would have made me a bit happier if I was a bull the next day is when it didn't close, it didn't break the low of that bar. Instead, it started pushing back up again, which to me then suggests, well, actually, there's some demand. The demand is coming through for this, and it's going to push. And it pushes, and this time it pushed back up again, and held, but this time it held higher than the bodies of the previous, suggesting there's demand here. The supply isn't too high at the moment. Next day, well, what happened? Looks like it actually gapped, actually, but maybe not. But it pushed up again. Now here it broke those prior highs there, and then supply came into it. There was demand pushing it right the way through, and then the supply came in. Now, for whatever reason that occurred, I'm not going to go into that now. How this may have run in, may have been taking stops out from back the highs here, and had a bit of overrun. So there would have been supply from these stops, demand from these stops up here, beg your pardon, and then supplies come in and squashed it, and it sold off again, and again it sold off, went right the way down, and then reacted back into this supply area. So again, supply area. Now you're watching what the price action is doing, where it hasn't got through. So it's weakness. It's showing weakness at this point here, and then the next bar sold off. So there was some weakness coming through in this market, and then again, just watching what I taught in the other one, you've pushed up here, you put a low, it's starting to push back towards this area. It's then fouled, consolidated around this area, which I'll talk about another time, and then it's broken down and put in a lower high at this point. So the supply is just pushing through here, the demand is dropping away, and the price is dropped away accordingly. Okay, so that's the first part. The second part I really want to show you here is the reaction of trend lines, where you get buyers looking at trend lines, and then I'm going to cover the rest of the subject on another day. Now, it's interesting, people don't actually even notice this post event, but again, we've seen this price action, and it's started putting higher lows in, confirmed, pulled back, but put a bit of a mess here, but then pushed up. Great. Pushed up, what did it do? It ran into supply. There was supply at this area before, it's reacting to that supply area. So this is a key area. No surprise, look, 133, just about where it is actually, and that 133 is a key area, so that's where the supply is coming in. There's plenty of supply. Traders are willing to sell at 33, So that becomes a bit of a target for those buyers. The buyers can say, well, actually, and so what happens is those buyers buy in there, they look back over here, see the previous highs, think, oh, better get out here. So a self-fulfilling prophecy, maybe it rolls, and it rolls quite strongly that next day. Reaction to not closing above that area, it rolls quite strongly. But looking at the trend line for a moment, so I've drawn the trend line on between these 2 points here. Let me just highlight these with a little dab of blue. So you've got this one here, so to this point here. Now I always go on the tails. Now I know some people will use the bodies, but price actually went down there. So for me, that's more significant. So price has gone down, and you say, well, that price didn't really react to the trend line. Well, it did. Look at the very first red bar here. It came back and pulled back. Now, it reacted immediately. Now, why does it react? Because traders will look at these trend lines and buy into them, particularly where you've got already a confirmed higher low coming through there, and it's looking like it might push up. Okay, it's a bit softer here because it then confirmed a lower high, and it's a bit of indecision around this whole price action, but it still reacted initially to that trend line. So if you're intraday trading and you're watching a trend line, well, there's a chance that profit taking may occur at that point. And well, in the bigger picture, it's arguably with this trend line, the trend line is the decision of whether it's in an upward trend or a downward trend. That is still suggesting at that point an upward trend. And then prices moved through it slightly the next day and closed below it, which would suggest maybe a continuation to the downside. But demand came through. It never broke that the next day very much, if at all. But demand came through the next day and pushed up. And where did it go back up to? Back up towards supply, where we know previously there's been quite a lot of supply. So it comes back towards this 133 area. Now, the very fact it didn't even get up to the shoulder of these candles suggests weakness, and particularly on this first bar here, this red bar here, suggests weakness. And it sold off. It gapped by the looks of things here, and then managed to have another attempt. But again, what we're seeing in a market like this, so if you're reading this from a swing point of view, there's weakness coming through, and then it's broken down and as it's triggered here, it's put a lower high in again. Now we saw one of those back here. It's suggesting this market is not holding on. When it comes down to the trend line next time, well, the trend line would have moved slightly, so let's readjust, because you can move trend lines. It's fine to move it down to the more relevant bottom there, and when you start doing that, you see that as it approaches that trend line, it looks like it's approached it, and buyers have come in early. Why? Because they do often come in a bit earlier. And so on that green bar, certainly we had a day upside. Traders don't always wait, and bank buyers in particular will buy it, start fading the move before it actually hits there, so they're in, and they start building their position maybe if they think it's going to go further. But in this particular case, on this particular day, it was an early buy against that trend line. And again, people may draw them slightly different. You can say, well, actually it hit the bottom of the trend line. Well, that may be the reason it moved, but regardless, it moved up. But the thing is, the very next day showed the score. That trend line effectively, if you call this move here, this move here, this trend, this upward movement looked like it was over. What we're going to get in if it break this low here is a lower high confirmed, and so there's weakness in this market at that time. Regardless of everything else fundamentally or whatever was going on, there was weakness in this market. It closed below that, which is a sign of weakness. Now, of course, the next day did all sorts, ended up on a sort of bullish day, but it's still in a weak market, and the supply is coming. There's plenty of supply there. Every attempt at pushing up, look at the tails on the candles as a bit of an example. They're long tails. The price is moving away from that, so it's pushed up, pulled back again. It's weakness in that market. Supply is coming in. So when it does break that trend line, close below, goes back up, often a retest the trend line. This pushed through by looks of things, but as soon as it's pulling back again, well, this may be a sell signal, and off it's gone. So there you go. And well, double bottom, just to finish off with, looking at this here, it didn't quite get there, did it? So it all looks quite good for a double bottom. Didn't make it. Again, buyers start buying in quite often, but however, pop that trend line on the bodies, different case. So there's the demand area sitting around there. Often traders will be buying off of the bodies, so watch the bodies as well as the tails. Sometimes it will come to the tail, other times to the body, and even then it's gone a little bit early, and then there was strong buying coming through. So a good support area, and that area at 26.92, just below 21.27, of course, is a key point, among, as well as the 133 with this pound at the moment. So there you go, supply and demand, price action around highs, lows and trend lines. That's this session over. Hope you enjoyed it. Please subscribe if you wish to, or give me a thumbs up if you liked it. Take care. Bye for now.